city of Lagos. Welcome to Business Morning this Wednesday, the 26th of September. I am boasting on my fire. Of course, this perennial vehicular accident on Lagos-Ibadan highway just as we're exiting the city of Lagos, Nigeria's financial epicenter. Early this morning, heavy vehicular traffic spreading right into the city as we speak because of that 40-footer container fully loaded exiting the city and down just after Bega Bridge. If you are just watching, if you have no real business on this highway, you may want to stay back a little bit, perhaps until later on today. The Federal Road Safety Commission, the LRU, and the LASTMA officials are there, the police trying to make things work. Both sides of the highway is now a bit of a gridlock for the last couple of hours, at least over the last 3 hours and counting. Okay, let's get on to the big story. Yesterday, the central bank held its second to the last meeting for 2018. The committee provided a bit of insight into the state of the economy and the markets since July when the last meeting was held. This is a bit of a brief insight into what the communique was yesterday. If you missed that communique, read out by Godwin Emefiele, the central bank chief, these are the highlights. The committee says that although the current growth remained weak, effective implementation of 2018 capital budget and policies that encourage credit delivery to the real sector will boost demand, stimulate economic activity, and reduce unemployment. The central bank chief went on to give us a hint at the state of the market. He says that broad money, what's called M2, was at 4.47% annualized rate, below the benchmark of 10.48% for the entire 2018. Nigeria's posted net foreign assets, which increases 18.63% in the month of August. Analyze that, you get 27.94%. And that's above the benchmark of 18.15% set for 2018. Of course, you know where the net foreign asset goes. That goes into treasuries, bills, bonds, as well as some into equities and other financial assets. Meantime, the net domestic credit contracted by 4.18%. If you analyze that, that gives you 6.27%. And that's well below the benchmark set for 2018, 12.45%. The part of the communique highlighted the net credit to the federal government, which the central bank says was down 34.68% in the month of August, while net credit to the private sector rose a marginal 0.81% in the month of August, against a contraction of 0.13% in the month before that. That was July. That's all still below the benchmark of 5.64% set for 2018 financial year. Take that to inflation threshold, where the MPC says the near-term upside risks for inflation remained the dissipation of the base effect and the expected 2019 election-related spending, the continued herdsmen attack on farmers, and the current episodes of flooding, which has destroyed crops and would affect food supply and prices. So, in terms of where we are at the FX market, the MPC noted the decrease in, or the decline in external reserves to $44 billion US, the decline in total FX inflow by 38.34% to $6 billion in July, against 9.73% in the month of June. So what's the downside risks to the outlook? And you see that there on your TV screen. My apologies, please. You find the impact of external policy normalization and a strong US dollar, late implementation of budget 2018, weakening demand and consumer spending, build-up in contractor debt, low minimum wage, which the government is talking about, impact of flooding on agri, insecurity in the north and north central, and the growing level of sovereign debt. That's a little bit of what we had from the MPC yesterday. Let's cross over to the stock exchange, give you a sense. On the day, we were listening to the MPC. The stock market went up more than 2%. Temple Ashaju is taking this from the stock exchange studios. Let's see the numbers. Once we get Temple in here, they'll show you a green shoot above 33,000. That's a very strong reading for a single session, the highest we've had since, I think, sometime in June. Yes, then we got the equity cap back to 12 trillion. Local currency. In terms of volume, that's a very strong comeback on Tuesday. 222.95 million ordinary shares for 3.28 billion, 3,327. Thank you to Nestle and Dangote Cement, two of the bellwethers on markets. Let's get the 5 sectors for you and give you a bit of a better understanding of where the market finished off on Tuesday. That's your banking sector in the green territory, about 1.5%. Consumer goods did about 3.24%. Of course, thank you to, as I said, Nestle led that by 6.7%. Then you find the industrial goods by 0.75%, and Dangote Cement pulled the weight there by 2.44%. And of course, the insurance is making a comeback after several weeks of decline. Will the insurance sector regulator, NICOM, make good its promise to start the new reclassification program by the 1st of October? The clock is ticking. Today is the 26th of September. We have just a few more days to find out what happens from the 1st of October. Of course, that will be an Independence Day here. The 2nd of October, Tuesday, will be the day the markets will be reopening for us to have a full picture of the insurance sector. We're following that for you here on the program and on the channel as usual. Meantime, the oil and gas came in a tad of the rest. Lagging the rest of the 5 main sectors, Total was down 5.1%, and Mobil, which you call Double One PLC, down 2.12%. That sector is down by that margin. Okay, so just take it straight. To the oil and gas stocks, and that's where corn oil is sitting unchanged for how many sessions now? That's just going to remember that. But it's just sitting part at 21.90. 40 oil is at 20.05, a bit of a green shoot over the past 2 weeks. That's looking a little bit quiet now. That integrated energy trader is in the news. Then we'll talk about Mobil, which is Double One PLC. Negative 2.12% reading. MRS is also sitting in the gray corner with corn oil at 28.55. Very paltry, 140 units for that small cap oil retailer. Then Oando got a major boost on the day. That's the biggest green shoot of the day in that space at 525, 1.273 million shares. Flip that over. Thank you, guys. Let's look at Seplat below the 700 high points that we've seen so far in 2018. Now sitting at 622 on the second trading day of the week. Total, which is another bellwether, finished off 180 on the counter, negative 5.11% reading. Eternal Oil is much smaller in terms of market cap in the water, 3.20%, finishing off 605 kobo on the counter. While Japol was a red shoot, about 8.33%. That's a very sharp decline there for this oil maritime services company on the back of 2.415 million ordinary shares. So that's how the equities market go. But if you check through the unlisted securities, a bit of the positive reading from the Nigerian Stock Exchange rubbed off a little bit on the NESD over the counter, a very gentle finishing for the day, about 0.02% on the US side, still trying to hold the 700 reading of the index at 710.3, market cap 480.68 billion. But if you look at the volume, not a bad day. If you look at 1.149 million unlisted shares traded for that Naira value, 35.101. In 10 transactions, that's much a bit better than Monday. We had only 4 transactions to start the week. Okay, so a lot of activities in the debt market, and that's part of the questions we're asking later today. If we have the debt market now moving forward with yesterday's MPC do nothing decisions, was the signaling from the central bank with the communique we had after lunchtime yesterday. So let's take a look at the FMDQ over the counter, the market, and this is where you find a bit of a quiet Tuesday. Today's the DMO debt auction for the month of September. We'll get to that in about a minute. But again, these are the secondary trading via the FMDQ, OTC Securities Exchange, a very small amount of transactions, 19 deals, 3.76 in naira value. And you can see the long-dated paper maturing 18th of March 2036, leading the pack in terms of the most actively traded. A very small patch of transaction in short-dated 15th July 2021. They're less than $500 million naira. Take that away and let's look at the treasuries, of course, where most trading actions always concentrate a bit of a bearish sentiment on the second day of trading. We're stepping into October in the next couple of days. So treasuries maturing next month are taking the limelight in terms of how investors are packing their trading, their actions there. 140 transactions for 45.7 billion naira at a 9.9% discount high for paper treasuries maturing 11th of October. It's the 18th of October next to that, and the 25th of October coming in at a 12% a discount high. If you do the tally, bills maturing in October accounting for about close to 80 or 90% of the total Tuesday transactions on the FMDQ over the counter. That's 158.65 billion naira at the bottom of the page. So what's the bond market story for today? We're looking at the DMO expected to offer 90 billion naira of the April, 90 billion naira in total. That is coming through in about three tranches. The debt office will offer 25 billion naira of April 2023, a reopening of existing paper. Another 25 billion of papers maturing, naira paper maturing March 2025. That's another reopening. And the rest is a 40 billion naira February 2028, a reopening as well to investors. So the three papers, 90 billion naira being offered today by the debt office are all reopening. And keep note of that, 90 billion naira, a very small size if you look at the calendar. So with this, we're done with the third quarter. We'll be looking forward to the fourth quarter debt offering calendar from the debt management office. So that takes us to the month of October. What are we expecting? This is the month, one of the busiest months when you talk, when you speak to a number of activities, everyone trying to get something important done before the final period of the year. We're now counting down to the final 100 days of 218. Nigeria Economic Summit Group, the NESG, will be holding its annual conference in the new month. And the focus this time is on poverty to prosperity, making governance and institutions work. This two-day event will focus on how to transit from poverty to prosperity and how to make institutions work on the government side, reducing the number of folks in poverty and moving them into prosperity. I'm sure that conference will be looking at China. That's been very successful in taking millions, and not just out of poverty, but creating more millionaires within the Chinese economy. Also in the new month, we're looking at the World Bank and IMF annual meetings in Bali, Indonesia. The island will be hosting hundreds and hundreds of delegates from around the world to Nigeria, inclusive for this annual meeting. The Nigeria's new finance minister, Zainab Ahmed, will be making face-to-face meetings with bilateral and multilateral partners at the Bali, Indonesia event. This will be her first major outing, and we'll be looking forward to hear from her and the rest of our team. And of course, that will include the central bank governor in Bali, taking us through what the outlook is on the economy as we wrap up this year and we'll move on into the election cycle. That will be February next year. Meantime, you know this already, our third quarter and 9 months earnings season will start within the first to second week of October. The early birds will bring their numbers in as expected, but don't forget we have quite a bit of a backlog of second quarter and first half of the year. We don't have the numbers in yet. Fidelity Bank is one of those. We're yet to have the first half 2018 numbers from this tier 2 lender. Will September finish up this Friday without the first half numbers from Fidelity Bank? We're asking the market and traders and analysts to talk to us on this between now and the rest of the week. That's on Fidelity Bank. But again, beyond the earnings season, we have the insurance sector. We touch about that on this a bit. Will the insurance sector reclassification happen in October as earlier planned? And will the National Assembly resume on the 9th of October as rescheduled? We'll be right back in 2.